Welcome back. So the world does matter. Of course, China extremely matters, if that is even a way to phrase it. It's a very, very important because the overwhelming of the economic expansion did really happen in China with the tangible assets in the commodities market and such. So we kind of hit this peak economy because they've expanded to such a level in China, literally cities, and you should research it if you haven't. It's really extraordinary to see. Cities, dynamic cities that not a soul lives in. Now, I always anticipated that these cities they were building was in projection for, in preparation for their global dominance in the economy. That's pretty good, angle too. I think do it now while money's cheaper because the inflation that's going to come on the buying power of all currencies will make it far more expensive in the future for China to expand. So maybe they were doing it that way. I don't know. Maybe it was an out of sight, out of mind. They expanded these cities just because they're making money and they didn't care. But the point is, it's peaked. They're building things that no one can even use, which tells us we have to pull way back. And here's the best example for that. This is China's gross domestic product. It's really what they're producing. Now, we are used to China being very, very aggressive with the rate in their GDP. As you can see in this chart here in the left, 1997 to 03 is the Asia flu scenario. They didn't have much of an expansion, about 7%. Then they rise way up. They boomed in the 08 and then absolutely collapsed again back down to the 7% level. Well, look where we're at today on the far right side. We are actually at the bottom of the cycle for China. So not only are we at the bottom of the cycle of their GDP, we are now getting to a point where China, as I just said, they have cities that no one lives in, bridges that go to nowhere, factories that are under pressure, thank God, President Trump, trying to bring manufacturing back to America. And then their GDP then sinks, of course, down to the lows at such levels, it is a forecast of a major recession. Where can we go? If the cities are built with nobody living in them, what do you want to build next? Or should we just go to a different country? That's kind of my take. But there's really no other country that may have the ability to produce economic power that could actually help the world because of population and numbers. So this is a really big deal for cycle highs, and it begs the question then for we the people, what do we do? Now, your financial advisors, I don't try to throw them too hard under a bus because they're good people, a lot of them, but they're just stuck in this tunnel vision. They have no choice but to keep you in the paper world. Now, I've learned to have some really good respect for financial advisors that manage money in a different way, where maybe they give you certain amount of percentage returns off of municipal bonds or things that maybe have a little bit more security where they can go in and just tax the land or something. There is some good strategy and way to make income. The problem, the contention I've always had is a lot of that income is really eaten by inflation. Inflation, whether we think is there or not, is, and we all know it, of course, right? I mean, we're buying the groceries and we're paying for the gas. So we know the inflation's there. So the smaller numbers don't matter as much. But the problem is they have to keep you in the paper world. They're told by their bosses not to let money leave the house. So we're kind of getting a skewed vision of the real financial landscape. Not that it's, really their intention always. Most of them just really don't study. They're too busy dialing and trying to, develop relationships, so they really don't study as much. Or if they do, they're reading more the Wall Street Journal or the very narrowly scoped fiat world, I call it. And to some extent, it's legitimate. Don't get me wrong, obviously. There is a legitimate money-making opportunity within a fake world. We've all seen that. I mean, just look at Bitcoin. Look at these things that have no tangible value, but yet they return profits. So I understand. What I'm trying to get at is a bulk of our wealth, we the people's wealth, our retirement system's wealth, our future savings, or the inheritance to our children's children. this is the portion that really stands the question here of protection and preservation, and where best could that be? And I get the whole concept of manipulation. I understand the derivative manipulation in gold and silver. We're going to address some of that in the, if not this program, next week. But it's okay, because as long as they do that, it's allowed you to capture stuff this tangible at a very fair price. And so to get out at a market cycle high and then come into a tangible asset at a low is the best opportunity you can have. For instance, this one is more of an expectation of a lost decade. Now, we mean that because look at this dramatic chart. This is the S&P 500 large cap index. But look at the very left there when 2008 collapsed down to the bottom and then 2009 started to rise up. Ever since 2008, look at how we've escalated this market. Now, most of us didn't even touch this thing until 2015, but look at how high this has expanded. This is an image of the largest expansion in U.S. history. Now, the scary part about it, the S&P really is comfortable around, if you've noticed, that 1400 level. Now, that's going to be at least, in this chart, a 52% decline. Now, even if this were to happen slowly, which it does, over the next 5, maybe even 10 years, I don't know where this next cycle goes. But one thing we know is this expansion was so unrealistic globally. We have such geopolitical tension and pressure. There's just a strong possibility that this bear market we're entering into will last quite some time. And the whatever tricks they try to pull to stimulate, print money, whatever they try to pull out to make it happen, will allow assets like this to appreciate. So this cycle is a big one because it shows you the largest expansion in U.S. history. And then it gives you kind of an idea, if you looked at that chart long enough, it gave you an idea of where it looked like the S&P was comfortable. And that was more about 1400. And it wasn't in 2008, of course, it collapsed, half of that. But we see at 1400 it's pretty comfortable. Maybe that's where it would end up falling to, but that's a 50%, folks. That's a $100,000 IRA down to $50,000. And then how long would it take to come back from that? Because you see a lot, if you remember in 2008, a lot of people had lost 50, 60% in their portfolio. That's the main projection we heard. It took 10 years, 8 years for that money to come back. But here's the bigger problem. And then they made money, hopefully. Some people really have since 2008, and that's wonderful, but here's the problem. Inflation since 2008. What that money's buying you since 2008. Look at the gas prices and the food prices and the clothing prices since 2008. That's our issue here. And gold and silver had obviously, well, for those who, obvious, but for those who did not realize, had a tremendous run in hundreds and hundreds of percent return until it was crushed into manipulation and brought back down, which is good because there are people who did enjoy that run, and now the repositioning rate about now because of the cycles to get ready for the next one. So how's the best way to do that? Stay tuned, check this out, and you'll find out.
Buying power. What does it mean to you and your family? Have you noticed the prices of everything we buy are rising? Goods and services are becoming more expensive, and the money you work so hard for buys less and less and less. If you saved $250,000 in cash in the 1960s, that cash today would be worth approximately the same, $250,000. Yet does it have the same buying power today? No, not even close. Now take that same $250,000 from the 60s saved in silver instead of cash. Today, it would be worth a staggering $4.25 million. Now that's buying power. Protect and preserve your buying power now by rolling over a portion of your IRA into a silver IRA. Use the power of Constitutional Money Silver to protect your standard of living in retirement and maintain the quality of life you are hoping for. The paper dollar you are saving has tremendous challenges ahead, so don't delay. Call Cornerstone Asset Metals now at 888-740 847 3309. Don't give away your hard earned savings any longer. Be diversified. Get protected today.